What's up, everyone, and welcome to the Daily Macro Update for Tuesday, February 3rd. My name is Johnny Zerdy. Welcome to the Macro Optics channel, where we discuss everything macro in relation to strategic positioning in the markets. Today, interestingly, we're having a little bit of a sell-off. Taking a look at the headlines here. It looks like the end of this government shutdown is actually happening pretty quickly, right? So it wasn't like the previous government shutdown that lasted nearly 2 months or over 2 months. And so hopefully we'll be able to get some more data releases, maybe not this week, but possibly releasing some of the labor market data next week. But it is good news that we are seeing the government reopen there. Although, the narrative really is that there's a huge continued exit from a lot of these Mag 7 tech stocks, right? So, really over the past 3 years or 4 years since, the end of the 2022 bear market, mega caps have been leading the charge with the market new all-time highs, right? So we all heard about the super large concentration of the market within these huge Mag 7 stocks. And now that they're having a little bit of weakening due to valuation fears, as well as some of the, just over exhaustiveness within the market, within these mega caps, as well as the broadening out into more cyclicals, as well as in small caps, a lot of those large mega caps are continuously dragging down the larger S&P 500, and that's really what we saw here today, as well as with Bitcoin breaking down below 73,000, which is the lowest since November of 2024. We're going to be going ahead and getting into all that here. As always, if this is your first time here, welcome. Now, we cover a lot of macro data in this channel, but it's important in this post-pandemic era where there's higher than average inflation and higher than average interest rates compared to the last 15 years, that also you're going to get higher than average volatility. And with that, you want to make sure that you're incorporating macroeconomics into your investing strategy along with technical analysis as well as fundamental analysis. You have to add this third leg now, which is macro analysis, in order for you to stay ahead of a lot of these different large trend shifts in the market. And this really was the case before 2008. But, over the last 15 years, people have just gotten used to buying stocks and holding them, whereas now we are in a new era. It's not that this is bad. It's just you have to pivot. That's what we have to do as investors. And so if you currently have a great source of information right now, giving you a lot of this macro research, definitely stick with them if they're helping you be successful. If you're trying to start your macro journey with incorporating macroeconomics into your investing process, then I would highly recommend going to our website, macro-optics.com, and take a look at our two different offerings there. We have basically two things. One's called Macro Vision, which is where you get a weekly update on the macro environment, the best things that we see that are bullish, the worst things to avoid that are bearish, trading ranges on Bitcoin, gold, silver, oil, the dollar, as well as the bond market. You get full access to our Sunday macro wrap-up Q&A, not just the first 30 minutes. And you also see the different trends for the top 25 ETFs and top 10 stocks that we like. So you get all that 4 times a month, as well as access to our community there. If you're someone who wants to trade alongside myself and our team and get access to all of our trading range indicators, as well as some other things, as well as all of our ETF stock picks every single day, then I would highly recommend our 6-week Macro Mastery Challenge, which right now we do have open for enrollment. This is where essentially you learn our entire process, you trade alongside of us, and you really just are going to see results pretty quickly. And so right now we have it open for cohorts. So if you'd like to learn more about that, you can hit the apply for a strategy session button, book a time with myself or someone with my team, and we can review it with you to see if it's something that makes sense. But those are the two things that we offer here. You'll never hear me shill any type of cryptocurrencies or stocks. I'll leave that to the financial gurus, which I'm not a guru. I'm just a person just like you who's trying to figure out this entire investing thing. But with that, we'll go ahead and get into the markets here, as I'm sure you guys are like, shut up, dude, get into it. All right, we'll do that. We'll do that for you. All right. So when taking a look at the Mag 7 stocks ETF MAGS here, we can see that this is a chart that looks way different than something like IWM, which is small caps, right? This is making higher highs and higher lows. Whereas the Mag 7 stocks, they're pretty much pushing sideways, You had a pretty large deceleration today in names like Nvidia as well as Microsoft. Microsoft has just been a dog. I mean, this thing had a great short opportunity actually a couple weeks ago, or I'm sorry, last week on earnings. And so if you were shorting that into the top end of the trading range there, congratulations. That was a heck of a short. Things that are doing well though are things like Walmart, as well as Google. Google having a little bit of a selling opportunity this morning, but really Walmart has been one of the best trends, and you've had several different buying opportunities in this Walmart bull market. You're pretty much, let's see here, 1, 2, 3, 4, 5, 6, 7 times now for Walmart ever since July of last year. Times to get in, and now it's going parabolic, and now people are like, oh my gosh, Walmart. It's like, come on, you gotta make sure that you're recognizing these trends a little bit faster. That's what we do for our members there. But yeah, taking a look at the S&P 500 right now, it's still in bullish trend. You have the lights behind me, still green color, right? So the bookshelf, for those that are new to the channel, if you are looking at the color of the bookshelves behind me, that is the trend for the S&P 500 that we currently have in our model. Green is bullish, yellow is neutral, meaning wait and watch, not buying or selling it. And then red is obviously bearish. So right now it still remains green. And yeah, you had a little bit of a buying opportunity here. The market's about to close here in about 4 minutes. The main thing that my team and I were looking at here is where the VIX is going to close. And it looks like it got pummeled down here below 20, which is actually a good sign, right? I'm sure that there was actually a couple of names that my team and I were looking at heading into the close that I did buy before I went live here. That's why I was a little bit late. But yeah, we were discussing those in the group. So yeah, another great buying opportunity today. I hope you're getting excited with all these buying opportunities. If you're someone who is having a lot of fear over the past couple of days, then take that as an indication that you need some different type of strategy, because you truly should have been really excited and taking advantage of a lot of opportunities these last couple of days. All right. So that's a reflection for you and for you to decide on what to do with there. We continue to get bond yields inching higher. Let's take a look at the 10-year bond yield, still in bullish trend. Let's take a look at the 30-year. Man, ever since they started cutting rates have gone up. Isn't it funny how that works? Dollar is still continuously having a rebound. Speaking of rebounds, we've also got a decent bounce in gold, which gold never went bearish in our model, or even neutral for that matter. So we were giving it a couple days to wait and watch. So I mean, if we do get another red day tomorrow that isn't lower than where it was and it's on lower volume, I'm gonna just buy the heck out of that. So I was giving it a wait and watch though, just to see what will happen. And also too is silver. I mean, this didn't go back to bullish trend. This is more neutral still, but I mean, gold is a little bit more of a candidate in terms of buying a little bit more there. But yeah, pretty decent bounce, and a lot of those things that were selling off and panicking. So I hope you weren't panic selling the other day, and that you gave it a day so that you can sell a little bit now. Today would have been a good day to get rid of silver as it had its bounce. But that's what we were seeing here today. Bitcoin miners, bearish trend in our model now. If you didn't know that, now you do. Bitcoin continues to just, yeah, I mean, this thing just continues to bleed here. Really good out by the team. I mean, we got out around like 90K, told the whole group to sell. And ever since then, it's down, I think it's almost down 20% since we told the community to just sell everything, get out of crypto. But But yeah, so that's what we were seeing there. And Bitcoin and the crypto markets continue to bleed. Pretty interesting there. But it's not too surprising though, as we continue to get bank reserves, coming down after that year-end markup, and then also too, the Treasury General account continues higher. They have to stack cash because of these higher debt levels that they're continuously rolling over. Where was the? Okay, here we go. Yeah, so I always like to bring this chart up. This is net central bank liquidity. And if you guys don't have this chart, you can just create it on TradingView. Just take a screenshot of this. Let me see if I can zoom in for you. There you go. There's the formula. Take a screenshot, copy and paste that into your TradingView, and there you go. Now you have the liquidity index that we'd like to track here. But when you take a look and apply Bitcoin to this chart, let me show you something interesting here. Look at this. So Bitcoin, it has been directly positively correlated to this liquidity metric. And so this thing has stopped going up. And what has Bitcoin been doing ever since then? It's been dropping. So liquidity and Bitcoin are, positively correlated. Bitcoin is liquidity sensitive, inflation sensitive. And so when you have inflation continuously decelerating in the real data, as well as you have a weakening rate of change central bank liquidity, well, that's not necessarily an environment that you would want to own something like Bitcoin, right? Alternative currencies that are actually, proven throughout time, like gold, is what to own right now. So, and not only that, but in terms of different types of sectors in the U.S. economy, the best ones to own. Hold on one second. Let me get rid of Bitcoin's chart there. You want to own materials, staples, energy. Here's the bull markets right here, by the way. Industrials. These are the strongest bullish trends right now. Materials, staples, energy, and industrials. If you're not owning those in the portfolio, then I don't know what you're doing. Because that's where the bull market is. There's always a bull market happening somewhere. You just got to know where to look. Out of the S&P 500, there's 11 sectors. And so these are the strongest ones. The weakest ones, financials, discretionary, healthcare, utilities. Really, it's real estate and utilities. Those are the two worst. But yeah, so those are the strong ones. Those are the good ones. Yeah, I mean, out of the Mag 7 stocks, Google remains the best. We talked about that earlier. Look at Apple having a pretty decent ramp up. Let's see something here. It's right at the top of the trading range, so I wouldn't be buying it here. It might go to bullish trend in our model now, though. After that close, we will see. But even though Apple had this huge jump in price, look at that. Look where it closed, right at the top end of the trading range. Bang. But yeah, when something jumps to the top end of the trading range there, I'm not the first one to just try and chase this, right? You want to let the price levels come to you. Be relaxed. Be relaxed. What else here? Yeah, Qs is basically another Mag 7 ETF. So small caps, industrials, materials, all those things look a lot better. That's pretty much all I'm seeing today. We were supposed to get JOLTS data, job openings and layoff turnover survey, the JOLTS survey, but because of the government shutdown, they did not produce that report, and so we had a little bit of a data vacuum here today. But really, the big thing that doesn't really matter. The big thing to notice today is that volatility did have a ramp up, but it didn't go up too far. Right, it closed right around 17, and so this was another good buy the dip day. All right, but we'll continue to notice this this huge capital rotation out of mega caps and into small caps and cyclicals. So that's really all you have to know about. And yeah, so we're going to go ahead and open it up to some questions here. I appreciate everyone for joining, as well as it seems like the channel has been gaining a little bit more subscribers, although it's slower than others. But all we do is live streams on here, so it's kind of a hidden channel here. Okay, let's see. Yeah, biggest movers, silver miners, biggest losers, BDRY, dry bulk shipping. Might buy some of that though. Semiconductors, all of which have had pretty strong trends. Let's see what else here. What were some of the bigger? That's right, uranium as well. We talked about this on Sunday. That's been continuing to bounce. What else here? Copper miners, COPX. Silver miners, SIL. If you just want to have broad exposure to base metals and you don't want to like be juggling gold and silver, you have DBP, which is the base fund or the precious metals fund. You have that there. Let's see here. Things that were providing a little bit of a, let's see the top opportunity that I was seeing here today. Nothing too much. We'll give one gem away that my team and I've been looking at. QTUM, Defiance Quantum ETF. Was buying a little bit of this at the low end of the trading range there. Look at where it closed. Look at that. Right at the low end of the trading range in our model here. So QTUM. What are the stocks that are in here? Holdings. Micron. Oh, there you go. That's right. That thing has been a beast. Look at this. I mean, if you were buying this on the dip from the tariff tantrum last year, you're up over 533%. And that thing does not look like it's slowing down. When you see a trend like that, man. But yeah, that's what I'm looking at here today. Let's take a look at some of the questions. What was the one chart you had compared to BTC? That was this one right here. This is the net central bank liquidity metric that we like to look at. It's essentially, here's the formula. You take bank reserves, total bank reserves floating around in the financial markets. You subtract the Treasury General account, which is the, think of this as the checking account that the government holds at the Fed, right? So pretend like the Fed is the government's bank, which it really is. And the government is like you and I. The government holds their checking account at the Fed. And this is that. So you want, because it's a liability on their balance sheet, you want to remove that because we're trying to look at liquidity, right? Which is assets only. And because it's a liability on the Fed's balance sheet, whenever the TGA drops, that's actually liquidity being injected into the system. And whenever liquidity or whenever the government is refilling their checking account, they are storing up cash. That means that liquidity is being removed from the system, right? And so as we can see that right here, look at this. It's at $952 billion, which is the highest since May of 2022. And really what this means is like, think about it this way. Let's say you personally had a very large credit card balance, right? And you were trying to make sure that you had enough money in your checking account to pay that off at the end of the month or whenever you needed to. Then you would have the bank would on their viewpoint, from the bank's viewpoint, they would see that you would hopefully have a lot of cash in your checking account in order to meet that obligation, right? And so that's essentially what we're seeing here, right? Whenever the amount of cash in the TGA is high, you can just assume that the government is dealing with large debt obligations right now, which makes sense because we're almost in year five since the pandemic of this entire treasury bill issuance, right, at these higher interest rate levels. That's why Trump wants to lower the interest rate to 1%. It's why right now there's a huge concern about how interest paid on the national debt is becoming the largest expense next to Medicare, which is the largest expense, right? The interest on the debt has surpassed defense spending, which is a problem. And so, with all of this debt rolling around, you need to have more cash in your checking account in order to meet some obligations there. So, um, all in all that to say is that the longer that this charade goes, this musical chairs goes, the more downward pressure the liquidity market is going to feel. And so, you know, we can see that firsthand with how Bitcoin is reacting. And over the past, couple of years since 2022, the reverse repo facility was the main, source of all this excess liquidity being dumped in the markets. And so this was essentially your shadow QE. A lot of people were saying, oh, quantitative easing is dead, blah, blah, blah. It's like, well, it wasn't coming from the Fed. Now it is because the Fed has announced that they ended QT and now they're actively buying treasury bills, suppressing the short end of the yield curve, which is why there's a lot of fear right now with not trusting the government because they're essentially letting the long end of the curve run wild and choking the short end, which is called fiscal dominance. That's not a great point to be. Other ancient civilizations tried this and it did not end well. And it was typically towards the end that they did this. So, um, not saying that I'm going to be bearish on the markets and short everything, but from a longer term, like looking at decade long cycles, not flashing great signals on that front, but again, not trading on that information. It's more very long term. But yeah, and then when you want to just look at bank reserve levels, uh, the Fed is trying really hard not to break it through this, not to have it break through, this 2.9 trillion. Because if it does, I mean, you're going to see larger sell-offs in mega caps. So this is one thing that my team and I are paying attention to pretty closely. But yeah, liquidity measurements, liquidity in the financial markets. I mean, this is key. You got to understand this. Yes, Finn. If you just want to or I can just tell you it right now. Here's the formula again. If you didn't want to rewind, screenshot that, copy and paste it. Sorry, Johnny, did I hear you say consumer discretionary is not a hold right now? I mean, let me see here. It is technically in a bullish trend, but it's a very weak bullish trend. I mean, just look at this compared to a chart of energy. Two different charts, right? Which one's the stronger bullish trend? Which one would I rather buy on a dip? You know? So, yeah, I mean, this is on the verge of going neutral. Maybe it already has. Let's see here. All right. Let's see what kind of questions there are on TikTok, and then we'll go ahead and wrap it up here. Appreciate everyone for joining. Thanks for the likes and the shares. Are we ready for AMD? Yeah, I think AMD earnings are happening right now, correct? So we'll see how that goes through. I mean, it did spike up, got back to bullish trend. So we'll see what happens. Young Mamba. We will see a 10% correction this quarter in the markets. I already banked off my short options. Not a good buying opportunity just yet. Um, yeah, I mean, Young Mamba. Do you remember? I think it was like a couple weeks ago. You were saying like, Bitcoin's about to rip. What are you talking about? Short Bitcoin, blah blah blah. Well, you know, that's part of the reason why we were talking about it because it was losing trend. Liquidity wasn't good. So hopefully, you were, fading your own feelings there and paying attention to what we were talking about. Not we, the model. Your model should have turned red today. Nope, not yet. You've been short Bitcoin since 97K. I don't believe you there, sir. GEV, CEG, or VST. I think all of those are bearish trend. Okay, GEV, no, that's bullish trend. CEG is bearish trend, so I'm not buying that at all. And so is VST. So out of those, yeah, GEV, that is the trend to buy on a dip. Wouldn't be buying it right now though. I mean, it's right at the top end of the trading range, or it closed above the top end of the trading range. So yeah, the time to buy it was around here. XOI has a head and shoulders. Yeah, I don't care about that. All right. Well, it is almost 4:20 here coming up. So we're going to go ahead and wrap it up there, everyone. As always, if you guys have any questions, you can always shoot me a DM on Instagram or reach out on TikTok. Or if you want to be, more involved with our community as well as gain all the different resources as well as knowledge that we talk about here on the channel every single day, our picks, our different, tools as well as the trading range model here. If you want a license to that, you can check out our 6-week macro mastery challenge and you can book a call with me and we can discuss more. But I appreciate everyone for joining, and I will catch you on tomorrow's daily macro update. Bye, everyone.